back. We are in business. Right now, we are going to talk. Well, first, it's Jason Sheftel. Good to hear and see all of you guys again. It is now time to talk about one part of the giant story that is basically drowning everything else in the news, and that is Russia. But in this case, it's not really about Russia. It's what Russia and Russia's actions around the world are doing to China, and in particular, the Chinese stock market. So right now, the Chinese stock market is getting absolutely battered. Losses are spiraling out of control. This is the biggest collapse in 14 years. And the last time we saw this was the financial crisis in 2008. So that is a big deal. And that's what we're going to talk about now. And I'm going to try and explain some of why this is happening, why it's hitting the companies that it's hitting, and whether we are in for the beginning of something or if this is just going to blow over like everything else. And obviously you never know fully, but we can get some context and a sense of where things are heading, because this is an important thing to get some context on. And the general story, the general thing that is really happening is that people are starting to wake up to China's future. So let's just talk about this, right? Right now what's happening is the conflict potential, the potential for a conflict between China and anyone else in the world over Taiwan, over anything that might basically embroil the United States and its allies, that's getting priced in to the market, right? Russia's invasion showed everybody that countries aren't nice. The whole idea that Russia would join the global community, that anything was possible, that those heady days of the 1990s, that the Soviet Union was gone, Russia was now the Russian Federation. We were going to have an international space station where everyone was going to work together. There'd be the kumbaya moment. That is gone. Countries are countries. Countries that we think of as bad countries like Russia are still those countries. And China is most certainly in that bad country category. So the globe's response to Russia shows what's in store for China if it ever acts up. And Russia wasn't saved just because it had lots of cheap energy, raw materials, minerals, and other things to sell to people. It wasn't enough. And China isn't going to be saved as well just because it has lots of manufactured goods to sell to everybody. And just think about the speed with which all of this happened. Russia went from being a credit-worthy nation with low debt and vast central bank reserves to a pauper state experiencing hyperinflation and is about to have an imminent default within days or weeks. And all of this happened within 2 weeks. That's all it took. The financial firepower and the global coordinated response was this severe, and it all happened this fast. And China's story and the Chinese economy and everything we thought we knew about China could crumble just as fast. That is how serious what we are seeing is. And that's just one thing, right? This conflict potential is part of the story. Another part of the story is that China's manufacturing system is really under threat right now. And so if that's the special thing that was going to protect it in the first place, look at what's happening now. COVID is absolutely pummeling China. China's vaccines don't work. And now we're on version 3 or 4 of this virus. And the Chinese population has no natural immunity to COVID because it wasn't exposed to COVID. Whether the Alpha variant, the Delta, or now Omicron, or now this newer version of Omicron. So it is terrible. And what China is doing is it's locking down huge cities. Huge cities. This has been going on for a while now, but it's hitting major manufacturing centers. Places like Shanghai and Shenzhen. This is like Detroit and Seattle and Dallas and New York. Places like this just completely getting shut down. That is a really, really bad thing. And now we're in a world where you have to price in, are we going to leave all of our production in China, right? Companies right now, almost every company outside of basically the drug industry is gone from Russia. And they're not getting their money back. They're not getting their stuff back. Even talking about nationalization or privatization doesn't mean anything anymore when you can't invest. If you're a foreign company, you're gone from Russia. It's all gone. It's all written off. So what does that mean? Well, if you're a business, do you want to write off everything in China too? That is starting to get to crazy talk. This is starting to basically undermine the entire asset profile, basically the balance sheet of a lot of companies. If they have to do both of these things, it's crazy. So companies are really trying to get ahead of these geopolitical risks now. And unfortunately, it's really hard to even navigate these risks, but you still got to try. And when you think of the fact that the United States, in all of its military documents, talks about the two threats as Russia and China, you should probably really consider that now because you know what it's going to look like if things actually go bad. And also, just on the manufacturing front, inflation is also hitting China, and it's really bad. And when you make everything, kind of like Germany, if you make a lot of stuff, producing all that stuff all gets more expensive and less competitive when inflation kicks in. Add in the supply chain problems, add in all this stuff, and the viability of China as the manufacturing center that it's been is basically coming to an end. Who knows when? Who knows exactly how this is going to happen? Companies are very risk averse. They don't have endless cash, but the breakdown on the input side of the global system that we've seen with Russia, basically, and its excommunication for the global community, that is very likely on the output side eventually, right? With all of the manufactured goods that, you start with all the inputs, you start with all the raw materials, and you send them all over the world, and they eventually get to China where they're assembled and they're sent to all the consumer destinations. That's the world we live in, and that is the world that's changing. So the financial community in particular is starting to price in all these really macro risks, and that is a big deal. They've had their head in the sand for a very long time. The gravy train was still running. That was all fine. Now it's very different. It isn't going to work the way we thought it would. And basically, the rules of the game are being rewritten and transforming as we speak. Nobody knew or thought anything like what happened is happening really with Russia was going to happen. It would happen this quickly. It's crazy. But now you know, right? You know that something like this can happen, and you've got to start thinking about what to do. So, one example of this is American depository receipts, which is just a way for non-American companies to basically access the US capital markets, and you basically get shares in these companies. You don't quite have control, but you basically can trade a company like Alibaba or all sorts of Chinese companies that aren't actually listed in the United States. Actually, I think Alibaba might be, so forget that one. But a bunch of Chinese companies aren't listed in the United States. They can be accessed through these American depository receipts. And these receipts are getting hit really hard because, again, this is something that would get pummeled in a crisis, in a conflict. It is these connections that allowed the US and Chinese worlds to connect the same way the Russian world and the Western world were able to connect. These things, these linkages that had so much promise and potential in the 90s and 2000s are now serious potential threats. And so that is a huge reason why the Chinese stock market is getting hit. And the hardest hit companies in China right now are almost certainly are its tech companies, right? A major Hong Kong tech index has lost over $2 trillion in value in a couple days. Again, people are waking up. The growth story for Chinese tech companies in particular, of all the companies in China, is over, right? Obviously, the property sector, that's all gone, right? You aren't going to have the massive growth you saw with just in general with real estate, with all the people moving from the fields into the cities. You need all these apartments. You need all this stuff. You can just massively expand. The Evergrande problem in late October, that period of last year, that already showed that story is gone. But the tech story in particular, this one is over too. People might not realize, but I have a video on this too. It's called something like the vice, the corporate vice in China. And Chinese tech companies are currently being squeezed by the Chinese government as it tries to rein in these companies. It tries to take back control over the sources of authority and political leverage in China. It wants to control the major technologies that give companies access to all sorts of data and that have so many points of contact with citizens or subjects in various ways in China. This is all very essential for a communist party that's preparing to create a bit of a fortress China where they're not going to be expecting help from the outside world. They're going to need their companies to play their game. They're not expecting to basically gallivant into a glorious future anymore. That's over. So what you're going to see, what we are seeing right now is all these tech companies, they got squeezed by the government last year. It was a huge story. All the tech billionaires were hit. All of this, the founder, Jack Ma, the founder of Alibaba, mysteriously disappeared. All of this stuff people remember, but it's part of a broader story that the tech companies are being squeezed by the Chinese government. And that's just one part of the vice, because what the world is now starting to see is how all of these tech companies could be crushed, not just by the US government sanctioning Huawei and all of the other companies that's sanctioned, but just crushed by global sanctions and by this global response in the event of a real showdown, in the event of a real crisis. So now these tech companies are squeezed from both sides. They have the Chinese government breathing down their back, and they have the entire West basically preparing to give up on them because you can't expect much from these companies anymore. It's just not reasonable. So the era of enthusiasm is over. I mean, Alibaba is losing tens of billions of dollars in its market cap. Tencent is as well. People are starting to realize that a Chinese tech sector squeezed by the Chinese government and by the West will have nowhere to go. It will have run out of rope. And in general, that's a real major story, both for the Communist Party and for the Chinese economy and for a lot of our ideological and idealistic visions of the way things might work, or just our financial, greedy, green colored lenses where we just wanted to see the best story possible because it's what made us the most money if you're in finance. All that is really struggling. So in general, what we're seeing is global macro risks, particularly geopolitical risks, particularly demographic risks, particularly transformations in the industrial sectors, the global industrial sector all around the world and in consumer markets. All of this is starting to get priced in, and global markets are going haywire. That is the basic, best way to talk about it. We are seeing a systemic breakdown in the nature of the global system that we've had for so long, and it is really hard to price all of this in. And the problem is, they're starting to price in the real geopolitical risks that they've ignored, and that's a tough thing to do, and the results aren't going to be pretty. Finance has avoided and dreaded this very moment because it means, in a lot of ways, the financial gravy train is going to come to a screeching halt. A lot of U.S., particularly institutional finance, is about collecting capital flows from all over the world, packaging it, moving it around, getting into the United States, into other places, and all over, and getting a cut all along the way. And all of that is really difficult, right? There is a good thing, of course, depending on what you mean by good, but the U.S. markets, the U.S. currency, many ways to invest in American assets and debts, all of this is going to be flooded with foreign capital that's looking for a safe harbor. This is a very typical story. So we see the US dollar is at its highest it's been since the pandemic really hit markets in spring 2020. And that's just part of it, right? We don't need to go into all the bonds. We don't need to go into all the different financial assets, but this is a major story. It's a common story. Whenever there's a problem around the world, there are problems around the world, people don't rush into crypto. They rush instead pretty much into safe US assets, whether it's treasury bonds, whether it's US dollar, whether it's US assets, whether it's farmland in Minnesota, it doesn't really matter. It's US stuff, because the bad news is that a lot of this world is about to come undone, right? You're losing Russia, you're losing China, you're basically losing a global world. You're losing the bad bugaboos are basically getting kicked out of the party, and we're gonna have to figure out what to do with the wreckage of both our ideals and of the actual system that we've been trying to improve, and which has, like China, run out of rope. So finance tries to reflect reality, right? Unfortunately, the world has gotten extremely financialized since the 1980s, and add in globalization, add in the digitization of everything, add in the fact that so many things can be made, so many markets can be made probably far more liquid than they should be. That's pretty vague. We don't need to get into that maybe for another video, but all of this stuff, it makes us forget that finance is typically trying, historically and typically and classically, is trying to reflect reality with these financial abstractions. It's trying to reflect the economic activity in the world and to facilitate it. That's generally what it does. It doesn't always do it perfectly. And right now it is recalibrating, like I said, and the picture it is painting is bad. That is why things look the way they do, right? And it's not bad just because finance is going crazy. It's because the picture for the world is bad. The future isn't looking all that great. And I'll just end on this final note just to talk about how this tech bust, right? A lot of the story about China, right? And these are really the reason I'm focusing on tech stocks in China is because that's the ones that people really care about. Nobody really cares all that much unless you're a bondholder, you're someone who has some skin in the game with other companies in China. Most people care about the big dog Chinese tech companies, the Facebooks, Amazons, that kind of stuff of China. Those are the ones that felt like they were going to go spring out into the wider world and take over. And that is where a lot of the stuff is really coming down, and that's where a lot of the companies are really getting hit. But the bigger problem is that the tech bust we're seeing in China, in the stock market, isn't just Chinese, right? It's actually American too. It's actually a global phenomenon, right? So Facebook has lost over $500 billion in its market cap in recent months. And there's good reasons for this, right? There's all of its massive publicity challenges, its ad challenges with Apple, its challenges with the American government, with basically some antitrust stuff that's probably coming down on it pretty soon. And this story isn't that different from a lot of the Chinese tech companies. It's a different flavor. It is not quite the same powerful state in the same way. There's more rules to the game. It's a longer process. It's not just a hammer that just gets thrown down on companies whenever the Chinese Communist Party feels like it. But nonetheless, there is a real shift going on, right? $500 billion in market cap. This was a $1 trillion company for a while. This is part of the major optimistic tech story of the 2010s. We sort of had finance fail us in the 2000s with the financial crisis. And during the 2010s, we basically had the growth of a massive optimistic tech story about how tech was changing the world. It was pushing us into the future. We had new iPhones, new tablets, all these new consumer technologies. It was really an amazing time in a lot of ways. And the hype cycle behind it got so big and so important. It was almost more important than a lot of the technologies themselves. And the truth, of course, is that these technologies, even calling a lot of the stuff that these companies are doing, they're not even technologies in that big a way. They're not doing transformational, move civilization forward type stuff. It's a new chat app. It's a new entertainment device. It's all this kind of stuff. It isn't the technology with a capital T, the way you'd think if you're talking about the tech sector. It's a very different thing. And the truth is, a lot of the things that it was trying to do, they're not panning out. And I mean this across the board. I mean this with Amazon, Google, Microsoft, all this stuff. It's not that they're not great companies and they don't make good stuff and they don't get profits on that, but the investment they're doing isn't pushing the world forward, right? So that optimistic story of the 2010s, people used to look at websites like The Verge and Engadget and Gizmodo and all this kind of stuff and feel enthusiastic and optimistic about where the world was going. And of course, they're getting sold all sorts of goods, and there was a dynamic there that worked. But now that's all gone, right? Nobody is really expecting. Well, actually, there's still people who are really expecting this, and it's still part of the world we live in. But a big thing that's going on is that it's slowly starting to rot. We're slowly starting to realize, person by person, that tech isn't quite what it was, right? We're on iPhone 15 soon. Well, that's still just the iPhone, right? And then hopefully we'll get new augmented reality apps, and that'll push things forward. But there are so many major problems in the world, right? We're looking at agricultural markets. We're looking at energy markets. We're looking at industrial manufacturing. We're looking at basic steel making, all of this stuff that is really challenged, and a whole set of global products and all these global supply chains that they're not going to work. What's going to happen if you don't have all the pieces you need, whether it's your semiconductors for all these technologies or any other specialized inputs or component parts? They don't just manifest themselves out of nowhere. You actually need the whole global system to put it all together, unless you know exactly what's going on in your supply chain and you can trace it out and know you'll be good regardless of what happens. So this is a tough story. And tech, not only is the tech story getting hit, but a lot of these companies that have relied on the whole world that we've built to build their platforms on top of, they could really get hit too. So it's not a good situation. Tech is supposed to power us into the future, but unfortunately, most of our intellectual firepower in a lot of these companies, and a lot of the big name brand companies, trillion-dollar companies for a while, they weren't working on the hardest problems. They were developing chat apps and new financial algorithms and crypto hustles, and this stuff just isn't it. And the market really should price this in a lot of ways, but the deeper thing here is that we need technology to power us into the future. And unfortunately, we got into this weird complacent phase where we expected everything to be okay, everything to be nice, nothing would go wrong. And now things aren't nice and they're going wrong. And we're going to have to recalibrate, just like the financial markets and everyone trying to figure out what the world really is. We have to recalibrate too. And a lot of the people that are really invested in technology, like personally, and that's what they want to spend their time on, it's time to find newer, better things to put your time into, because we have real problems coming and we need new technologies and really smart people to work on them. But you're probably not doing that work if you've been at the Facebooks or the Googles of the world. They stopped innovating like over a decade ago. So that's an important thing. And this in general, I hope gave you a better sense of where this whole stock market crash in China is coming from, right? It's coming from Russia. It's coming from the world starting to realize that China's not a nice country either. What might happen if things go bad, if things go sour? This was vague. This was for a long time in finance, you talk to people and they're just like, oh, it never happened. There's too many interconnections. There's no way this would happen. And then meanwhile, in 2 weeks, Russia's lost all of the companies that have invested in it in 30 years. right? This is huge, right? And China's had companies there invested for 40 years, but the same thing could happen. And that could is not vague anymore. It's not empty. It doesn't mean nothing. We're seeing the playbook, and we're seeing China on its side. It's starting to realize that these things are going to happen because that is the playbook that it has laid out for itself. It knows what it wants to do in the future, and it is going to move forward towards it. It doesn't really have much of a choice, and the options are really bad there. So it's going to do its thing, kind of like Russia is doing its thing in Ukraine. And we can't stop that. But now we know on both sides, China's not going to expect its foreign currency reserves, any of its debt, any of the things that it's built up to try and insulate itself or protect itself from financial warfare like this to actually work. And companies, any company that's in China has to know that you're not going to get anything back. It's there. It's not going to be yours anymore. You're not going to be able to, yeah, you can write it off. You're not going to be able to sell it. You're not going to be able to do anything. It's just going to be another massive write off. And the scale of the write offs that people are imagining right now is a big reason why we have the massive tanking Chinese stock market. And it is very likely that this will continue. Why would this stabilize when we are going to see a lot of public and private consternation and teeth gnashing as people try to figure out what's going to happen? China is actually being asked by Russia to aid it. There's a major battle going on, not just between the West and Russia, but there's China, which, like the companies in China, China's in a vice. It needs Russia and it needs the United States. Can't fully abandon one, it can't fully abandon the other. I mean, ideally, it really could try and abandon Russia, but then it would be punished. It would destroy a lot of its energy profile. It is a bad situation. And I should really do more videos about what's going on with the Russia-China thing. I've tried to tell people that this isn't an alliance. It's a marriage of convenience, but it is still there and it's real, like this stock market challenge. So I will basically leave it at that, right? How this all plays out, we're going to have to watch. But if you're interested in what I have to say, you definitely should like this video, share it so more people can find it, subscribe, throw on notifications because there is a crazy war going on and it's probably worth knowing a bit more about what's going on. So with that, I will leave you guys.